Hey guys, welcome to Tycoon Thursday with Resh and Sean. Yeah, today's gonna be exciting. Come on, guys, come on in.
Hello. Tycoon Thursday. I love this. I love this name, man. Exciting Thursday. Very exciting today.
Absolutely exciting. Guys, today we have a lot of very exciting things to talk about, right? I don't know if you all actually read the recent news, the most recent news with regards to what happened with regards to Hong Kong.
Security
Okay.
law. Yeah.
Right. So again, what actually happened was this. The China Parliament just approved the Hong Kong National Security Bill, and hey, I'm going to ask Sean about some questions about what he thinks, what are the investing implications, all of that stuff. It's going to be really exciting, but guys, it's going to be crucial. It's going to be really, really important, right? So right now, here's what I suggest for you to do. Okay, what I suggest for you to do is to get out a notebook and a pen. All right, I need you to take out a notebook and a pen and get ready to write notes, because we're going to be dropping some investing gems, some really, really important stuff. So you want to listen very carefully. Are you all ready, my friends? If you're ready, type in "I'm ready."
I'm ready.
Oh, come on. Sean is ready. Are you ready? Sean is ready. Are you ready? That's the question. Okay, so Sean, so my question to you is this, right? So the news just came out. What are your views about it, right? What are your views about it, and what do you think investors should be watching out for in the coming days, in the coming weeks?
Okay, cool. So actually, now you see, right? There are a lot of things that we don't claim to know. But if you all understand what is happening, do you all understand what's happening right now? The security law. If you all heard about the security law and you understand what is happening, please type law. LAW. If you don't know you don't know what's happening, please type question mark. Okay, question mark. So ignorance is not always bliss. Okay, because Charlie Munger did once say, you just tell me if I know where I'm going to die, right, I'll just avoid the place. Now the thing is this, sometimes there are some place we don't know whether we are going to die there. Also avoid. You see, there isn't a need to actually, okay, some quite a few question marks. Okay, very simply, just let me give you a summary. China, I think, just passed a law. There's this security law regarding Hong Kong, and okay, let me try to find the correct term. So okay, in short, right, basically right now, China, supposedly, based on what I've read so far, they have the right to send troops down to take down like people who are protesting, or they are showing a lot of like unhappiness in Hong Kong, or saying bad things about the government. So, by the way, if you all didn't know, right, Singapore has this law as well. If you all didn't know, what law is it called? Is it dissonance law? I mean, I can't remember.
The dissonance.
Yes. Anti something law. Okay, so in Singapore, we do have this law as well. If you say anything like totally bad about the government, you try to create hatred, you will be taken down. Now, actually, it is nothing new. But the thing is, the implication comes in. US became very unhappy. They say that if Hong Kong is subjected to such a law, okay, the details of the law are not clear. That's right. But it's a perception. Now, if people are afraid to actually trade with that particular country because of this law, this country is likely going to suffer. Yes, you're in Hong Kong, right? So, Zibo, what do you think? Do you think that this law will have an impact, first of all, on the economy? Okay. Second of all, then we talk about the stock market. Because as Warren Buffett says, and personally I believe in this. Okay, guys, I've seen a lot of theories. Some theory says that I've seen guru says that the market forward pays the economy. So the market will move before the economy. I've heard different cases, sector rotation. Now, I went to dig my own check, right? People who came out with all these theories, they are mainly professors. They are not investors, Really, you can look all these theories, right? Very few investors, mainly professors. I'm not saying professors are not good, but I'm saying that the investor, like Warren Buffett, like Charlie Munger, they say this very simple thing. They say that when the company does well, when the business does well, the stock will follow. Okay? So what it means that it's actually the company first before the stock market. So the economy first before the stock market. Now, I understand that there's a dissing, but eventually, given the long run, it will happen. So what do you guys think? In Hong Kong, what is happening right now? I feel that there will be an impact to the economy. Anyway, there's a US-China trade war. It's becoming worse and worse. US is, when I say US, I mean Donald Trump. I know it's not the whole entire US, because I have some US friends here. Hi, Jeffrey. Yes. Oh, issue is if they give an inch, a mile is taken. Yes. Okay, Zibo, you understand, correct? There will be impact in Hong Kong. So in this situation, usually when we say that there's a crisis, there's an opportunity, correct? But in this case, I would say please be patient and see how the whole thing unfolds. Actually, very simple because now we do know that the Hong Kong market has, in fact, Asian market has fallen because of this. There is impact, right? The question is this: imagine your money. We are allocating money, right? Your money are your children or your soldiers, your soldiers who are also your children. Now, without a lot of very clear data, are you willing to send them to a particular area? For example, you say, I'm going to invest into Hong Kong right now. Is this the smartest thing to do? Okay, what do you guys think? Do you think it's a good time to invest in Hong Kong right now? Maybe you guys can answer me. Sometimes we don't need to know everything. We need to know what we don't know. If we know that we are not sure, don't go and invest in these kind of things. There are so many other simple things to invest that will make money. Why want to go and take the risk? For me, I don't see this as a money making opportunity yet. I rather watch and see. I do not know how you'll pan out, and I don't want to pretend I know. So I will keep my money with me and not put into the Hong Kong area. I'm sorry about that. Yeah. Okay,
Interesting, Sean. But I have a question for you, man. I have a question for you. Right? Sure, there's a lot of unrest and stuff like that, right? That's going on. But as investors, what we focus on are businesses.
That's right.
Your businesses and whether your business is actually making money. I think that's something that we have both learned from the Buffetts themselves, right?
I love that. Yeah.
Really focus on businesses. So, but hey, what are the implications, man? Let's say, for example, if you're looking at a business like Tencent. I know you love Tencent as well, right?
Yeah.
Like, would that still be good to go if the prices drop because of what happens?
Great. I'm glad you pointed out. So you see, like I mentioned earlier, go and invest in things that we understand. So now I have I just spoke to one of the investors from Hong Kong this morning. He's investing into Tencent heavily. He's investing into even Baba, even Baidu, even Yamsi. I mean, these businesses, especially Tencent. Now you see, Tencent is listed in Hong Kong, but their business mainly is in China. So we like to now there's an opportunity there. So because stocks that are listed in Hong Kong, sometimes they may drop. But actually, if their business is in China, well, this may be a good opportunity. When there's a delisting, they are dropping because of the perception that they are Hong Kong stocks, but they are actually China business. So will they be affected in Hong Kong? Actually, not so much. I mean, because you see Tencent Holdings, they are serving the China population, the Hong Kong population, mainly in China. So I love your point. Go for companies like this. And make money easily. Cool. That's what some of them say.
Oh, dude, I love what you said, man. I love what you said. Yes, definitely Hong Kong will be affected, but hey, look for the desync, and most importantly, like invest in the companies that probably will not be affected by whatever's going on, right? Most importantly, I think the most important thing that you said was in what you understand.
Yeah.
In what you understand, right? I think that's I think beyond like whether it's Hong Kong or whatever it is, I think the most important thing that you mentioned is invest in what you understand, bro. Like
that's right.
You can see, there's a crisis, for example, but hey, if there's a crisis in Turkey but you have no idea about Turkey, why the hell are you putting your money in Turkey? Correct, not?
If you want to put your money in Turkey, right, you are thinking like a VC lah. Okay, so for all those like very small risky company, you're no venture capitalist, right? You're no Shark Tank, right? I don't know whether how many of you watch Shark Tank. So you must understand. Now, do you know the chance of people investing into VC and companies actually making money in VCs, right? Is about 30% only. So they invest in 100 companies, only 30 begin to make money. And make money doesn't mean a lot. So some of them, they are hoping for that 0.1%, become the next Alibaba, becomes the next Facebook, then they make a lot of money. So you must understand, you don't go and look at a company that you don't really understand, looks exciting, looks cheap, and then you put a lot of money in. If you want to invest in those kind of company, because you sense, you smell, I don't know how you have a certain sensing that there's a huge opportunity, right? Please invest a little bit, like a VC. Can you please type VC? VC means, right, you know that when they invest in small companies, they don't go and sell their house and invest one. They invest a tiny bit. And who was that? I think Li Ka-shing invested. Was it in Zoom or somewhere? But he made billions already. He invested
in Zoom. Yes, he did. Early invested.
He invested 1 million or something like that. But 1 million is pocket money to him. Okay, guys. So you must take that in that perspective, correct?
Dude, absolutely amazing, man. Sean, I have a very, very important question to ask you, man. Dude, so for people who are wondering, like, how do I know whether these companies are good? Can you bring them through the process? Like, show them a particular company and maybe bring them through the process of how you actually analyze, right? I think that would be very, very useful to everybody to understand.
Okay, I'll use a simple framework, and then after I'll show share some of my screen. Okay, now the simple framework, I last time I always use this portion. I call it GST. Okay, Singapore there's a goods and services tax. All right. Now you want to be the one taxing people. Okay, so GST, the first thing is ask yourself, how do they generate money? Who is paying them? Who is paying them? Now, if you cannot answer who is paying them, please don't invest. Okay. So very interesting. A lot of people tell me very companies that I've never heard before. So I ask myself, hey, how are they collecting money? Who is paying them? And a lot of people cannot tell me. Like, okay, I cannot think of any companies right now. So remember G, can you please G? Generate revenue. How do they generate revenue? Now then S is sustainable. Is the way they are generating revenue sustainable? So is there economic mode? Are they special? So example, you ask me, how is Alibaba generating money? Well, they actually have a few pieces of business. That's where you have to read up. And if by the time you read the first paragraph and you don't understand, I suggest you don't really invest too much or spend too much effort. There are many businesses that are so much easier. Later I show you one example. Maybe I just share with you guys this.
Guys, Sean's going to be sharing absolute gold right now. If you want your friends to benefit, I ask you to please share this video, right? Share this video, and most importantly, tag both of us. Tag Next Level of Sean here, tag Resh, Six-Pack Investor as well, and share your lessons, guys, right? Right now, we're going to go into details. We're going to go deep. Please share this video, right? If you share the video, type in shared. That'll be really, really helpful for all of your friends and for everybody watching.
Right. Okay. Yeah, I think I need you to share my screen. All right. Is my screen being shared?
Yes, that's right.
Okay. Yeah. So let me give you an example. Okay, Yum China Holdings. All right. Now, sometimes of course, we can do more due diligence and things like that. So you can see from the company profile. This is one website I like a lot. It simplifies my investment process. You can see how are they making money. Yum China is the largest restaurant chain in China. Who is paying them is people who eats KFC, Pizza Hut, and all the other Taco Bell and stuff like that. Coffee and Joy. This one is something that they are coming out strong because coffee is something new in China, and right now the Luckin Coffee is not doing super well. So I don't know whether it affects people's perception and stop buying the coffee, although they have accounting fraud. Maybe they have accounting fraud. Maybe their coffee bean is fraud also. Okay, so anyway, Yum China, they are operating in China. How are they making money? How do they generate income? They make money through selling fast food. Okay, so and you can see 6,000 units, 2003. It is actually sort of like beginning of okay, I wouldn't say beginning, but I can tell you they have a lot of room to grow. Number two, sustainable. GSS. Are these companies sustainable in China? Okay, they are focusing a lot on China. The cool thing is this. These concepts have been proven. KFC, Pizza Hut has been in the world for I think more than 30, 40, 50 over years. Actually, I think almost 100 years. But the thing is this, they have been proven to be sustainable in the other parts of the world. Now they are in China. They are picking out. I believe they will be sustainable. Now, it is, of course, my belief. If you do not believe they are sustainable, what do you guys think? Do you guys think that in China, KFC and Pizza Hut will continue to sell for the next 5, 10, 20 years? If yes, please type KFC. If no, please type Subway. I don't know. Or please type something else. Now, so I do believe there's a chance for them to succeed, because China, we do know that now in every country is a very interesting thing. Every single country, right? There are some countries that are more developed and they are ahead of the rest of us. So, for example, we do know that US and now even Korea, these are countries that are slightly ahead in terms of trend, in terms of habit, in terms of their maybe like eating patterns. And you can see other companies following them because they are the trendsetter. And right now, China has opened up for a short while, I think less about a decade. And all these are you can roughly say that it's like almost US. Okay, not exactly that way. There are many other ideas around it, but China's eating patterns in terms of coffee, in terms of fried food and all that, right, is probably like 20, 30 years behind US. Okay, so if you can go back 20, 30 years ago and invest in KFC, would you do that? That's the question. Now, we can't do that for US, but we can do that for China. You can see that, right? So GST, right? G, understand the business. How do they generate income? S, is it sustainable? This forces us to have to understand the business. If you do not know whether they're sustainable, example, oil and gas. I know some people, they look at Occidental Petroleum, a company that Warren Buffett buys into. How do they make money? They drill oil, they sell oil. Is it sustainable? A lot of people have a blank look. I do not know whether they are sustainable. If you cannot answer, don't invest. Come on, keep your life simple, correct?
Bro, sorry, bro. Sorry, I was just quickly looking at Yum-C, right? I was just having a quick Yum-C. Currently right now trading at around. Oh, dude, the valuations look fantastic, and it's currently trading around $45. Trading around $45 per share, guys. And for those people who actually follow me, You can have a look at the charts as well. Oh, absolutely amazing. Sitting very, very nicely at the support line too, right? So Sean, please continue, bro.
Yes,
I'm loving this.
Yamsi, yeah. Okay. I don't really look at charts very much. Later we can talk about Oracle also. Now later I'll tell you my struggle with Oracle. But Oracle is very interesting. Okay. Okay, yeah. Anyway. Disclaimer, I'm vested because of the following reasons. Now GS, you remember GS, correct? What's T? T is track records. So track records, what do we look at? When you invest in a company, again, when the company does well, when the business does well, so does the stock. So we look at the revenue. Are they making money consistently? And then what else do we look at? Okay, we look at the income, net income. You can see that there's some negatives here and there. But overall, in my opinion, okay, we can dig more into it because you can see that the revenue means, right, every time people buy a piece of chicken, they are paying KFC China. It goes into the cashier. So you add all this money together, it is the revenue. And you can see the revenue increasing. Is this yummy, man? I mean, do you guys like this kind of a revenue? And then after that, we look at the.
If you love it, type in yum. If you love it, type in yum.
That's right. So it fluctuates here and there, but I believe the future growth, that there is future growth. And what else do we look at? We look at cash. Okay, free cash flow. Now we can see that there's a sea of numbers. So are all these numbers important? Answer is yes. So for example, is your height important? Is your weight important? Is your blood pressure important? Yes. But we try to actually focus on a few key important things. You can do a full what do you call it, health checkup, but you also can do a very more succinct kind of checkup, like take your BMI, take a certain numbers and add together. Okay. So okay, one thing that I like a lot is there's not much debt in Yamsi. Well, if a company has no debt, it can't go bankrupt. So this is one thing that I like a lot about Yamsi. So these are the few things that I actually track records in terms of whether they can make money, okay, whether they can collect money from their customers. This is number one. Whether they can keep the money, because after they collect money from customers, they have to pay people working at KFC, they have to pay the renter. So whether they can keep the money at the end, which is net income, okay, whether is there a real money. Okay, this is very important, guys. You can see free cash flow. These are real money. There's actual money in the bank. You can manipulate other things. We do know that some countries, I'll not mention which countries, but some countries, they have a reputation for manipulating numbers. And we do understand that. But one thing that's very hard to manipulate is the cash. That being said, guys, I want to say that the accounting systems is getting more and more sophisticated. Oh, by the way, good news, guys, good news. I think if you know the news is companies that are listed in US, Yamsi is listed in US. If they are listed in US, they have to go through certain accounting standards and they will check whether there's cash there. So sign of relief, if they are still around few months later, it means that they are really good. Right now, I mean, okay, by the way, Yamsi is not a China company. It is a US company operating in China. I mean, in case you all didn't know. Okay, so all this looks good. Can you see? So again, revenue, net income, look at the cash flow, look at the debt. How do we look at that? Look at this thing called interest coverage. And interest coverage, right, means this company, how much money they are making, how many times can they pay for their interest. Let me try to see whether there's another company that can show interest coverage. Because Yamsi apparently doesn't have any interest they need to pay. Let's see whether Alibaba Group has this. Okay, now you can see this Alibaba Group. Sorry if I'm going a bit fast. Are you guys catching this? Alibaba Group interest coverage. Now look at this final year. TTM means the latest 12 months, the trailing 12 months or the latest results. If you see 37.6, right, what does it mean? Every year Alibaba have to pay interest, correct? The amount of money they make, they can pay interest 37 years. So the problem comes with companies who are taking on so much debt. They have to pay so much interest, and if they miss the interest, it will compound, and they'll go bankrupt. So Alibaba also another very, very strong company. Okay, cool. So I
think we need to address one thing which is very important. I think a lot of people still don't understand that the whole China delisting thing. Right? It's not that Trump wants to delist all the Chinese companies. What they are looking to delist are companies that are not following accounting standards. And if they are following accounting standards, then they will be, they will continue, right? So it's very, very important to read properly. Okay, so Sean,
actually, yeah. No, okay. I mean, if you all first read it, right? Let me check. Hey, by the way, this is the beautiful thing about news. I love news. Beer to delist, Chinese stock moving at okay, so they try to make it very, very exciting, saying that wow, it is, and then the Luckin company, Chinese company fleeing New York. Okay, maybe they didn't use that tone. I imagine that tone. That's very, very exciting. US moved to delist, and then how come don't know why? Because of my what I searched, right? That is highlighted, right? So you can see, now if you read into the details, right, a lot of things is details. Can you all please write details? Or if you are becoming more knowledgeable, you understand not to just read headlines. Headlines are meant to make you excited so that you will click into the thing and then you'll read, and then that's where the website makes money. But now if you read more in details, you go and read the details. Why Trump's threat to delist Chinese gifts is a gift. Chinese stocks is a gift to US investors because it is a threat. They are not delisting Chinese stocks. They are saying if you don't abide by the laws of the US listing criteria, you will get delisted. I mean, is that good news? Is that good news? Or you want any like nonsense company to list on US? We don't want that, right? It is actually safeguarding ourselves. By the way, I don't think Alibaba will actually get delisted. I mean, even if it does, I'm not worried. But a lot of the very established companies will not be delisted because they are about. Okay, by the way, Alibaba, in my opinion, will not be able to get listed. You know why? Alibaba first get listed into US before they get listed anywhere else. Are they listed anywhere else? Okay, they were actually rejected being listed in Shanghai Stock Exchange. They went to US and list. It is not easy to immediately list in US. Okay, let me share a bit more now. This is quite interesting because I have the privilege of going through a listing process. I ran a listed company for a year, and I know all these very funny things lah. Okay, you want to list in US is not easy. The easy way to list into US, the easier way is first get yourself listed in another country, and then you go through backdoor because you are listed in another country. There is you are already a public listed company. There's where the rules of listing in US relax. So a lot of companies, right, if they first list in, let's say, Hong Kong, in China, then they release in US, it is much easier. But Alibaba, this kind, they go straight to US, is not so easy. Once they get listed, you know that they can be trusted. Actually, very interestingly, it is not easy to get listed in Hong Kong nor China as well, you know. But it's easier to get listed, let's say, in like Australia. Okay, never mind. I mean, there are some exchange that's easier to get listed. Okay, cool. So don't worry so much. Don't list. Baba also listed in Hong Kong, but I think it's after US, if I'm not wrong. Hong Kong is super difficult to get listed, guys. But there are many ways to go around it. If you're interested in getting your company listed, you can come and talk to us. There are many ways to get listed. But never mind, there's a time for another day.
Bro, that was an interesting experience, bro.
Yeah. Me, Reshlyn, we went through that. We went through all the audits and stuff like that. Interesting. Hey, don't anyone say names. I never say. You also say one. Okay. Yeah.
Yeah. Okay. Let's
also, don't worry. Yeah. GST. Sorry, can you all type GST? Focus. GST. Generate income. Is it sustainable? Is there a track record? Okay. Keep it simple lah. No need to go so difficult one. Ticker symbol Resh. RESSH. You want to get yourself listed? Team Resh.
Hey, let's do it, man. Let's do it, bro. So I have a question to ask, bro. Right? So again, you know, just now when you actually were sharing this, like for me personally, like I know immediately what to do to make money tonight from what you shared just now.
Oh, serious,
right? It's like,
tell me.
Hey, dude, for sure, man. Like, you know, we understand the power of options. What to do. We saw, you know, the price come down support level, like boom, right? And you know, that's the power of getting educated.
Huh?
Dude, that's the power of getting educated. That's the power of actually learning how to actually do it properly, right? And hey, you know, how to actually analyze the stock reports properly, GST, all that stuff. I think it's so important, man. But you know, today I want to talk to you about something very interesting, bro. Right?
Yeah.
So I have one question for you, man. The question I have for you is this. You know, recently, right? So you actually shared about how, you know, about 2 months ago, somewhere in March, you mentioned about how you sold nearly about 90% of your stock portfolio, correct?
Yeah. Correct.
Can I ask you, were there any stocks, bro, that you actually maybe regretted selling?
Actually, okay, I want to say this, guys. I do not know whether is it because of experience or what. After I sold, okay, let me share the screen again. Sorry, bro. I show you guys the screen now. Now, actually, after, okay, can you help me share the screen, bro?
Okay, hold on. Yeah, I think it's done. Yeah.
No. Okay, I want to share this. If you all saw this, is about 2 months ago, right?
Yeah.
No, because I sold the stocks already. After I sold the stocks, 2 months ago, the P ratios, I actually write down here, the P ratio. I mean, you all have to learn what is P ratio, what's fundamentals, all this stuff. If you don't know what's P ratio, you all must at least know what is valuation. If you don't know valuation, it's very hard to invest. So actually, I write down all these lists of stock I want to invest, and I started investing in them. So, but I can tell you guys, I on hindsight, a lot of people message me say, "How do you know to buy at the bottom? This. Do you know that this date 2 months ago was literally the bottom? Well, you go and look back, it is the bottom. I can tell you, I do not know the bottom. It's just that I know that it is. I would say, based on valuation, is undervalued. And then I begin to analyze, but this is on hindsight. Okay, guys, I want to say it's on hindsight. I'm not a prophet. Actually, I do hope to be a prophet. I cannot predict the stock market, but I think right. I also realize very strong companies. When I talk about very strong companies, these are the list of stocks I'm talking about. I just show you guys this. Now, very strong companies, they seem to have a very invisible support price, and that support price is based on valuation. So, for example, Facebook at the P ratio of 23, Amazon at the P ratio of 80, nowhere else you can find. Unfortunately, I didn't buy Amazon. Okay, but there's also for certain reasons where I feel that it's a bit too high. So all these stocks I begin buying back, and I share with you one more thing. I don't mind sharing openly. Now you see, I did sell away the stocks, but I tell you I'm quite lucky because maybe I sold away the stocks and they fly up, then I feel quite. Actually, even if I sell away the stocks and I saw the price going up, right, I will not have so much regret. Reason being, all the data about 3 months ago, if you all realize, about 3 months ago, where COVID starts to happen, all the data is telling me that the economy is going to get hit. Now, economy get hit doesn't mean the stock market will always react that way, right? So it's just like I mentioned to you, all your money is like your soldiers or your children, right? If you feel that there's a lot of danger for them, I rather pull them back. Why do I want to risk them? I pull them back, make sure everything die down, relax ready. When the stock market continue to rise, I go in back again. Now, maybe I miss that portion from the part that I sell to the part that it rises, correct? I miss that portion. But I rather miss that portion than risk the portion that it may go down. So why I want to risk? You can realize that by now I'm a true blue Singaporean. I don't really like to take unnecessary risks. And I was quite fortunate, but I think it is also a little bit of experience and also valuation tell me to enter at these prices. After I enter, I think you all know Skechers, Disney, all these stocks went out already. All these stocks went out. I want to share one more thing. Once you understand the power of knowing good stocks by GST, understanding valuation, simple valuation method, don't need to be too fanciful. Be powerful. There's a difference between fanciful and powerful. Can you all tell me which one do you prefer, fanciful or powerful? Now, if you don't mind, I add in a bit more, bro. So I was actually sharing this with my mentees, right? You can see this. I enter into BRK. BRK is a super safe stock, in my opinion. Again, in my opinion, will it go down? Maybe yes, but unlikely. In my opinion, unlikely. I don't go into very again. By the way, please pardon me. When I say fanciful, I don't mean that you must all follow my stocks, because there are stocks that I don't understand, but you understand. So maybe to you, BRK is fanciful, but to me, it's not. I understand these stocks pretty well because I've been following Buffett's method for many years. Now, I show something. This is an actual screenshot. It's an actual screenshot of my account. I bought BRK stocks at 178. How do I know that that's the bottom? I do not really know, but based on valuation, it's good. Actually, I did look a bit about on charts for this portion because I think Resh Pete was talking about charts, so I went to look at charts. No, I bought these stocks, right? The stock has increased by 4% already. This one was about actually just a few weeks only. Actually 1 week only, I think. Now, but you see, using options, right? I entered at the same time. But you see, using options, I increased by 69%, increased by 27%. So this is what I'm trying to say. You go for stocks that you understand very well. You know that they will be making money. You don't need to go and worry too much about this stock. Then you turbocharge using options. Options is a super powerful tool. It's like a jet engine, But you don't put a jet engine on a bicycle. You don't go and put a jet engine on a uni wheel. Do you call it a unicycle? Those unicycles. Yeah. You don't go put a jet engine there. You put a jet engine on maybe like a Ferrari, or like a car that's very stable, very solid. Put on it, you'll go a lot faster. So you know that it will reach your destination. You know that you can't control the stock, but you know that you'll be steady one. Then you put a jet engine there and then make a lot of money. Very simple one. Making money
bro, bro, you know what you're sharing right now is powerful. You're sharing actual examples. Guys, if you all think this is great value, can you please type in great value? Come on, guys. Sean is sharing actual freaking, like, what exactly he's doing, guys. Do you all think it's powerful, my friends? If your belief is powerful, type in powerful and do me a favor, right? Please share this video right now, right? Why? Because people need to see this, people need to understand this, people need to learn this stuff. Guys, right now, you see, a lot of people they don't have the information. This is one thing I believe, bro. You tell me whether you believe this or not, bro.
Right.
I don't believe there's a, there's a poverty gap per se. I believe there's an information gap.
Exactly.
Right? The reason why the rich get richer is because they know things that the middle class or the poor necessarily do not know. All right? Do you believe that, bro?
Actually, that's exactly true. The money you have, right, or the okay, I can't remember what exactly this particular term. But basically, right, being broke, right, is temporary. But being poor is permanent. So what's the difference? Being broke is like, okay, your bank account no money, correct? But you see, actually, being poor is like your mindset. If your mindset is poor, you'll be poor forever, you know what I'm saying? But you see, if you take away Warren Buffett's all his money right now, you take away Rashvin's all his money. That's why Rashvin is not afraid to give. He give everything, nothing in my bank account. You go and take a look at Rashvin bank account at the point in time when he give everything. He looks broke, but it's temporary because he can easily make it back. You know what I'm saying? Once you have the skills, you are forever a rich person. The financial situation where you look broke is just so temporary. But and conversely, people who accidentally make money in the stock market, right? Temporary, they look like they are making money, but you know that actually they don't know what's happening on, right? They are actually, that they'll be broke one, so they'll be poor. So I can't remember the exact phrase, but you understand what I'm saying, right? It's just it's just a situation is there's no income gap. It's all about knowledge and all about like whether you are willing to apply, right?
And guys, one more time. I just want to share with you. Okay, so Sean, last one advice, right? So recently we saw a spike in the market. SPY went up and stuff like that. Right? All right. So hey, what should people be watching out for? What should they be wary about? Anything? Tell me.
Yeah, I share with you something. Depends on how much money you have in the stock market. Because I think someone was asking me like how much cash do I have in right now? Actually, mine is still about 70% in cash. So I'm committing only 30%. Now, but that's because I've built my portfolio over the years. I'm able to position size and have different phases. If your portfolio is much smaller, example, almost 90% or even 100% is already inside the stock market, and then you're making some money already, I want to share with you something. It never hurts to take some profit. So very simple. Example, I think if you have been using options, like you just saw one of my options increase by 60%, correct? Very simple. If let's say you invest $1,000, it went to 1,006. Okay, 1,006. Just take back your $1,000. Meaning to say liquidate, take away your $1,000, and then let the $600 continue to run. Then you will never lose money. You see, always think about how you can protect your capital. And if that $600 continue to run, it makes money. It makes money. If it comes down, lose money, no problem. You never lose anything, right? It is much more easier psychologically. If you are using options and it's one contract, okay, maybe I go a little bit into details for those who are options investors. If it's one contract, you cannot sell away and take back 1,000, correct? Very simple. You close the whole entire position. You take back 1,006, correct? Example, using 1,006. You take $600 to buy into another options, either out of the money or something like that. So you always again, your money is like your children, like your soldiers. I don't want you to love money. We are not supposed to love money, but we are supposed to be good stewards. Okay, we are supposed to. I mean, the money is given to us, it's hard earned. Be good stewards of it. Don't take unnecessary risks and apportion them accordingly. So this is called position sizing portfolio. Very important. So if can take some profits and let the rest run.
I completely agree, man. Thank you for sharing, Sean. You're such a blessing to every one of us, right? So again, thank you for sharing your information today. Okay, so guys, thank you very much. Thank you for tuning in. We will see you next time. Ciao.
See you. Tycoon Thursday. Love it.
I love it, man. I love it.